Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Lewis, and I'm excited to share today's top stories with you. Whether you're a seasoned investor or just starting out, this is the place to be for insightful analysis and expert opinions. Today, we're kicking off with a fascinating story about hybrid mutual funds. According to a recent study by Ventura, these funds have seen significant growth in the quarter ended June 2025, with arbitrage funds leading the pack at a 22.2% increase in AUM. Multi-asset allocation funds also showed impressive gains, with a 15.4% surge in the same period. But what's driving this trend? It seems that investors are increasingly seeking low-risk and diversified investment strategies, particularly in a volatile market environment. Balanced hybrid and aggressive hybrid funds also saw healthy growth, while conservative hybrid funds trailed behind with a more modest 3.4% increase. We'll be exploring the implications of these findings and what they might mean for your investment portfolio. We'll also take a closer look at the sectoral allocations by mutual funds, which offer a snapshot of investor sentiment across both equity and debt markets. Some interesting trends have emerged, with private banks maintaining their dominant position and refineries recording notable growth. But what about other sectors, such as power generation and distribution, or finance and NBFCs? We'll break it all down for you and provide expert analysis to help you make informed decisions. So, stay tuned for more on this story and other top news from the world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and investment. In this segment, we'll be discussing a recent development in the mutual fund space that's caught our attention. According to reports, Parag Parikh Flexi Cap Fund has made some significant changes to its portfolio. The fund has added new stocks, including Axis Bank, Bharti Airtel, and Cipla, while reducing its stake in IPCA Laboratories. It's also added a new entrant, Motilal Oswal Financial Services, to its portfolio. Now, let's take a closer look at what this means for investors. The Parag Parikh Flexi Cap Fund is an open-ended dynamic equity scheme that invests across large-cap, mid-cap, and small-cap stocks. Its investment objective is to generate long-term capital growth from an actively managed portfolio, primarily of equity and equity-related securities. The fund's managers have stated that they continue to look at individual investments on their own merits and will not hesitate to invest if an opportunity looks attractive. They've also emphasized that their investment stance does not depend much on the macroeconomic situation, but is focused on individual companies. It's worth noting that the fund has a significant cash holding of around 23–29% in debt and money market instruments, which can be deployed in long-term investments at appropriate levels. This suggests that the fund managers are taking a cautious approach while still being open to new opportunities. As always, it's essential for investors to do their own research and consider their individual financial goals and risk tolerance before making any investment decisions. We'll continue to monitor the developments in the mutual fund space and bring you updates as more information becomes available. In conclusion, the changes to Parag Parikh Flexi Cap Fund's portfolio are a reminder that the world of finance is constantly evolving. As investors, it's crucial to stay informed and adapt to these changes to make informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're joining us again as we dive into the latest news and trends that could impact your investments. Today, we've been discussing the ongoing trade tensions between nations and their potential effects on global markets. But in our final segment, we want to shift our focus to a significant development in the world of central banking. The Bank of England has recently made headlines due to an unusual level of disagreement among its policymakers regarding interest rates. This split has sparked intense debate about the future direction of monetary policy and its potential implications for investors. At the heart of this division is Governor Andrew Bailey and Deputy Governor Ben Broadbent's successor, who have found themselves on opposite sides of the argument. While Bailey believes the current inflation spike is driven by temporary factors, others on the committee fear it could lead to more lasting effects on wages and prices. This level of dissent is notable because it marks a departure from the typical harmony we've seen among Bank of England policymakers in the past. Historically, the governor and deputy governor for monetary policy have moved in lockstep, but Bailey's encouragement of disagreement has led to a more divided committee. So, what does this mean for investors? The uncertainty surrounding the Bank of England's future decisions could lead to increased market volatility, making it essential to stay informed and adapt your investment strategies accordingly. As we wrap up today's episode, remember that central banks play a crucial role in shaping the global economic landscape. Staying up to date on their actions and potential disagreements can help you make more informed investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.